Today we're looking at one of the single most important things that you can learn during your accounting course, and that is what we call double entry accounting or debits and credits. Many students get confused by the idea of debits and credits, so right from the beginning I'll just make it very clear that debit simply means left-hand side and credit simply means right-hand side. Don't confuse these terms with anything else in accounting. The basis of debits and credits is from history. This system was developed over 500 years ago, and it's called double entry accounting, and it's the way accounting is done all throughout the world. It simply means that every transaction affects at least two accounts. Every transaction has at least one debit and one credit. If you see the exhibit below, then we're looking at what we call a T account. A T account is simply where we have a debit side of the account and a credit side of the account. And you'll see it down below on the screen where it says T accounts. For each transaction, there will be a debit and credit. An increase in any of the following will result in a debit. So if we have accounts receivable, go up. If we have drawings, if we have expenses, if we have an increase in asset, or if we have losses, so any of these accounts increase will be a debit. Any of these accounts increase will be a credit. So accounts payable increases if we have an increase in a liability, if we have an income or a revenue, or if we have a profit, that will give us a credit. This table below here is very, very important. I suggest when you print this out from the notes, you make a copy of it and you stick it next to your computer anytime you're doing your accounting course. If you can correctly identify debits and credits, then everything else you do in accounting will be much, much easier. As we see on the table below, if we have assets, a debit increases them. Expenses, a debit increases them. Liabilities, a credit increases them. Revenue, a credit increases them. Equity, a credit increases them. Whereas assets and expenses, a credit will decrease them. Liabilities, revenue, and equity, a debit decreases them. Let's have a look at an example. So if owner invests $5,000 into the business, then we have a debit for the asset of cash because that's increasing, and we have a credit for the owner's equity of capital because that is increasing. Let me just grab this from the previous page. If we have charged $200 for services provided, what we see here is we have a debit to the asset of cash because we're getting cash for $200, so it's a debit for the asset increasing. We have a credit to the revenue of service fees. So it's a revenue of service fees because that is increasing. Paid wages, $500. We have a debit to the expense of wages because that's increasing. We have a credit to the asset of cash because that's decreasing. Sell goods to J. Smith on credit, $1,000. So we have a debit to the asset of debtors, which is increasing. We have a credit to the revenue of sales, which is increasing. Purchase stock from Emily on credit. So we have a debit to the expense of purchases, which is an expense which is increasing, and we have a credit to the liability of accounts payable or creditors because that's increasing. J. Smith pays his account, so we're getting an asset of cash, which is increasing, so that's our debit. Our asset of debtors is decreasing, so that is our credit. Pay M. Lee's account, so we have a liability of creditor or accounts payable, decreasing, so that's our debit, and we have an asset of cash, decreasing, so that's our credit. Purchase shop fittings, $800 for cash. So shop fittings is an asset, so that's increasing, so that's our debit. And cash is an asset that's decreasing, so that's our credit. Paid sales commission to G-Chan, $600. So we have an expense of commission, which is increasing. We have an asset of cash, which is decreasing. Bank charge is $100, so we have an expense of bank charges, which is increasing, so that's our debit. We have an asset of cash, which is decreasing, so that's our credit. As you can see from that simple example, all accounts have a debit and a credit. Let's have a look at another example of how we actually do T accounts. So if we have here, we have, when we have a look at our transactions, on Abel set up a business, he opened a business bank account and paid $40,000 in capital. So what that means is we start off with the two accounts, which we call T accounts. And the first T account is going to be our asset account of bank. That's an asset. And this one is our owner's equity account of capital. That's an owner's equity. So Abdul set up a business. He opened a business bank account. He paid $40,000 in as capital. So this happened on the 1st of March. So the 1st to the 3rd. When we do T accounts, we write the contra account name in. So this is our bank account. So the other account is going to be capital. So under bank, we write capital and we put in the amount, $40,000. In the capital account, we write the date, which is our credit. The contra account name is bank, and we put in the $40,000. The next one, bought a business premises and paid $20,000 by check. So we have a third T account now, which is our asset account of premises. And we bought, so this happens on the 2nd of March, so the 2nd of the 1st. So the money is coming from the bank account. So the contra account is bank. So our premises account is an asset going up, and our bank account is an asset going down. So we write premises, $20,000. Okay, now we'll go on and have a look at some more examples of how we do double entry. As I said to you, double entry is the single most important thing probably that you'll learn in your whole accounting course. And if you can correctly recognize your debits and credits, everything else we do in accounting will be much, much easier.